Hello guys and welcome back to another video about risk management. And I have a question for you. Have you ever felt like you were on the edge of a cliff? Like you were one false move away from completely blowing your trading account? If so, don't worry, you are not alone. I've been there too, and I know of plenty of traders that are there right now. And the reason for this is because of one very important skill that can either land you as another number in statistics of 95% of traders that either give up on trading or completely blow their accounts, or keep you out from becoming another number in that statistic. And what this one important skill is risk management. Now, a lot of traders tend to think that risk management is some super complicated subject, when in reality, you only need to know three things in order to master risk management. Number one, you need to understand your own risk tolerance. Number two, you need to understand and implement stop loss orders. And number three, you need to understand how to calculate your position size very quickly. Now in this video, I am going to be teaching you how to do all three of those in the hope that by the end of this video, you will have the ability to master risk management for yourself. So if that sounds good, go ahead and click the like button for me. Go ahead and subscribe if you are new on the channel, and I'll see you on the other side of the intro and disclaimer. Okay guys, this is our account management channel on Telegram, and people are enjoying our account management service, and if you are interested then you can join us. Almost 1800 plus people vote us that we are trusted. Okay, let's get started with number one, which is risk tolerance. For the scope of this video, risk tolerance is going to refer to amount of money you are willing to risk on one specific trade. Let me explain that a little bit further. So anytime you place a trade in market, you are exposing yourself to specific amount of risk. This amount of risk is determined by two factors. Those two factors are the amount of pips down to your stop loss order. I always suggest using stop loss, as I'll explain that on number 2. But down to your stop loss order, the amount of pips plus your position size. These are the two things that are going to determine how much money have you at risk at any one specific time on a specific trade. Again, I'll go over that really quickly. Our risk, the amount of money we are accepting as a possible loss on a trade, is known as risk tolerance. The risk on a specific trade is determined by the amount of pips down to our stop loss order and our position size. This number, whatever it is for you, again is called risk tolerance, and we need that number down to your stop loss to be less than or equal to your specific risk tolerance. You never want to risk more than you are comfortable losing on a specific trade. As trader, we all lose money at times. We all lose trades at times. That's just a part of trading. Even professional traders have a plenty of losses. So what risk tolerance is a number that we are comfortable to losing an amount of money or a percentage of our account. We are comfortable losing when we have those inevitable losses. So just to give you an example of this, I personally use percentage instead of just whole number as dollars. And let's just for easy math assume that I had a 10k account. Okay, so I have a $10,000 account. For me personally, this is no way a suggestion for you. Your own risk tolerance will be determined by you and you alone. There is no way for anyone to tell you that what are you comfortable risking. But for me, it's between 1% and 3% of my total account value. Again, if I had a 10k account, that would mean that for every trade I placed while my account was at $10,000, I would be risking between $100 and $300. So my risk right here, if I am risking between 1% and 3% of my 10k account, is gonna be between $100 and $300. So for me personally, this is my risk tolerance, and every single trade that I place needs to be at or under this risk tolerance. My risk tolerance being $300 on a $10,000 account or 3% of my total account value is always my risk tolerance. So as long as my risk on a specific trade determined by the pips down to my stop loss and my position size keeps me at under a $300 risk on a $10,000 account or 3% of my total account value, then I am following my risk tolerance rules. Don't let this confuse you. If you are new, I am going to show you very fast and very simple way to calculate the amount of money you are risking per trade momentarily. And what this does is keeps us from letting emotion get in the way. If you are risking more than you are willing to lose on a specific trade, or God forbid you are not using a stop loss at all, so your risk is unlimited, what happens is emotion tend to control the outcome of those trades. You are not using a stop loss at all. Essentially, you will get out of that trade whenever you are so uncomfortable that you cannot take it anymore. And if you are using a stop loss but you are risking more than you are comfortable with, more than what your risk tolerance allows, then what will happen is you will end up moving that stop loss down because you are so uncomfortable with losing, or you will get out of the trade before a logical area to get out where your stop loss is because you are already losing too much money. Either way, what you will be doing is trading based on emotions, which is a great way to blow your account and a terrible way to try to become a professional and profitable trader. You will never be consistently profitable if you are trading based on emotions. So understanding and implementing risk tolerance into your risk management plan is one of the main ways we disregard those emotions because we are only trading with a risk that we are comfortable with. Let's move on now to number 2, where I'll explain what stop losses are and how to use them correctly. Stop loss orders are extremely simple. What we are doing with stop loss, let's say we have a buy trade and you bought in here at this blue line. What you want to do at that point is pick a logical place in the market where you know you are wrong about a trade. So let's say we bought in here. A logical place would be below the previous swing low for us to go. Okay, well, if we are coming all the way down here, getting below this previous swing low, we are probably not going to end up making new highs. Okay, so that would be a logical place to place an order. So we bought in here, we may decide to put a stop loss right below this swing low. So all we need in order to place a stop loss order is to know the price of that. So I just put a horizontal line on the chart and it show the price of 1930.48. This would be the point, I know I'm wrong, a logical place to place a stop loss order. So in order to do that, any trading platform should give you the option of placing a stop loss order. If your broker doesn't allow you to do that, I think you should change your broker. Okay, so let's click on new order and here is your order form. So this is symbol, that's mean in which currency pair you are going to open your trade, and here is the volume, that's mean position size, and this is your stop loss order. You have to put your stop loss price in this box, and this is your take profit. So you have to put your take profit price in this box. So after that you have to click on buy if you are gonna buy. If you are gonna sell, then you have to click on sell. So in this case we are gonna buy, so we have to click on this buy button. So let's repeat it. So this is your position size, we will talk about in details shortly. So this is your stop loss order price. So our stop loss point is this 1930.48. So let me put it 1930.48, and our take profit is 2010.02. So this is our take profit, 2010.02, and this is our position size, and we will talk about in details shortly. So after that we have to click on this buy button, this one. So our trade will be open, and our position size, our according to our position size and everything, that's mean we will have already a stop loss and a take profit for our this entry or this position. So that's it. So let's move on to next, and let's talk about the position size and how you can calculate your risk tolerance. So let's move on. That's as easy as it is to place a stop loss order, so nothing is too complicated there. And for a short trade, it would be exactly the opposite. If you were going short or selling the market, you would want your stop loss to be above price in a logical area that makes sense to tell you you are wrong about a trade, and it will be a certain amount of pips away, right? Well, that certain amount of pips, in this case it was 20, combined with your risk tolerance number that you have decided on, is what is going to help us determine the position size we should use. And what I am going to do right now is explain to you a very simple formula where you can actually determine the position size you need to use in order to make your stop loss equal to your own risk tolerance, whatever that is, using a very simple, easy and fast formula. So let's check out how to calculate your position size. Before we talk about the formula itself, we are going to use to calculate the position size we need in order to equal our risk tolerance on each trade. We are gonna need this table right here. So feel free to go ahead and write this down until you memorize it. Eventually you will have it memorized and you will be able to calculate your position size in seconds. It's super easy. Once you have this written down, we will now go through it. I'll explain what this is. What you see right here, PS, is your position size. This is the amount of units you decide to trade with. It's your actual position size. LPP stands for losses in dollars per pip. So for each pip that market move with what is known as a micro lot, which is 1000 units of currency, that's mean you will be losing if prices are dropping 10 cents per pip. Let's go through that one more time. A micro lot is 1000 units of currency. If you trade with 1000 units of currency as your position size and price drops 1 pip, that's mean you have lost 10 cents. And this table is general rule. There will be a certain currency pairs that are slightly different, but again this is a generalization and good general place to determine your position size really quickly. Let's move on to a mini lot. A mini lot is a 10,000 units of currency. So your position size is 10,000 units. When that's the case, every pip the market move is worth $1. So if you place a trade with 10,000 units of currency or a mini lot and price move down 1 pip, how many dollars did you lose? In most cases, that's going to be $1. The cool thing about all these is your broker should not only allow you to trade with these specific lot sizes, but it should allow you to multiply them by whatever you want. So you should be able to do 2 mini lots. That would mean every pip would be worth $2. You should be able to do as many micro lots as you want. Let's say 5. That would mean every pip would be worth 50 cents. so on and so forth. Hopefully that makes sense. Let's now move on a standard lot. With a standard lot, which is 100,000 units of currency, you will be losing $10 per pip for every pip the market goes against you. So if you get involved with two standard lots and price drops 5 pips, do the math on that and see if you can figure out how much money you have lost in that case. You have two standard lots, which means every pip is now worth $20. We have to multiply that by our 5 pips. That's mean in a situation where you are trading two standard lots and the market or price drop 5 pips, you have now lost $100. Hopefully that makes sense to everyone. It's super simple, and as long as you will have this written down beside you, you will be completely fine and you will be able to do all these calculations. Once I give you the formula really easily, and even after you get it memorized, you will be able to do these calculations even faster. So we have discussed two different things about risk management throughout this video. What are they? They are risk tolerance and stop losses. These are the two things we need in order to calculate our position size along with this table right here. So our formula is gonna go like this. Our risk tolerance, whatever that number is you are willing to lose, divided by our stop loss in pips, is going to equal our losses per pip. The amount of money we can stand to lose per pip, which we are gonna use this table to figure out our position size after we get this number. So let's do a figurative trade. Let's say you have a 10k account and for easy math you wanna risk 1% of that. So to figure out what 1% of any number is, you multiply it by 0.01, that will give you 1%, and 0.02 will give you 2%, and 0.03 will give you 3%, so on and so forth. Most of you probably already know that, but in this case we wanna risk 1% of this 10k account, which is what? And that would be a $100. And let's say for this specific trade, our stop loss is 25 pips. So our risk tolerance is $100 and our stop loss is 25 pips. Now see if you can do the math really quickly. It should not take long at all using this equation to figure out what our losses per pip can be in order for us to be risking a $100 on a trade when we have a 25 pip stop loss. We can actually do this on a calculator really quickly to make it super easy. We have a $100 risk, that's our risk tolerance, divided by the amount of pips in our stop loss, which is what? 25. That's give us 4. That's mean $4 is our LPP, loss per pip. So again, LPP mean the amount of money we can lose per pip is $4. Now with this being the case, I want you to look over at our table and tell me what position size you should be using. Remember, we can multiply these position sizes, all of these, by any number. So with that being the case, what you would do for a position size, just by using this simple formula and having this table beside you, you can figure this out in seconds. The only thing you need to do is to look over here at LPP and figure out where can I get $4 out of this. Well, it's pretty easy to see that one mini lot times 4 will give you a $4 risk per pip, $4 loss per pip in this table, right? So the only thing we would have to do is put a position size on this trade of 40,000 units or 4 mini lots. And the only reason that seemed like it took a long time is because I was having to write it out with you. We will go through a couple of other examples in case it was confusing, but this is an extremely simple process. Once you do it between 5 and 10 times yourself, you will be able to do this in literally less than 30 seconds to figure out the exact position size you need or around about the position size you need in order to place a trade with your own risk tolerance, whatever that may be. So now let's go through a more complicated example. Alright. So keep in mind our formulas we have on the top here and keep in mind our table we have over to the right. Okay, now let's imagine we have an odd number in our account. Let's say we have $15,858 in our account. Now at this point, you may want to say, okay, I want to risk 3% of this. So 0.03, we can do that on a calculator. So this is how quickly you can do it. Just come to a calculator, do 15,858 times 0.03. That gives us $475.74. This would be our RT. So if you are willing to risk 3% of your $15,858 account, then you are willing to risk $475 on your total trade, which means this is our RT. So we now have RT or our risk tolerance of $475. We now have a stop loss in pips, let's say of 40 pips. Just making up the trade here, we have 40 pips as a stop loss. Now do the equation to figure out what your LPP needs to be. Super easy. We would just take our RT or risk tolerance of $475. We would divide that by our stop loss in pips, which is 40 pips, and we need our risk per pip or our loss per pip to be around $12. Whenever I get a number like this, I just round it down to the nearest dollar amount. If this was 11.6, I would round it up to 12. If it's 11.4, I will round it down to 11. So now I know that I have an $12 LPP. All I have to do is come over to my table, look at it. We can either do 12 mini lots or you can do it one standard lots and 2 mini lots. What this means essentially is that our position size is going to be 120,000 units, which you should just be able to type into any brokerage account for your position size. But this is the formula you need to use whenever you go to place a trade to ensure that you are sticking to your RT, your risk tolerance, by utilizing your risk tolerance divided by your stop loss in pips in order to give you the loss per pip that you can use on that trade. Once you have that, you look over at your table, and after you look at the table, it's going to show you clearly what position size you need to use just by doing a little bit of math. So if you are still feeling it's most complicated way to calculate risk management for you, so I have another option for you, an easy way for you to calculate the risk by using this risk management tool. It is very useful for me and I am already using it for my funded accounts. I can easily set a risk to reward ratio in the tool. It will calculate automatically the amount of risk and it can automatically calculate position size for us. So if you want to know more about it, or if you want to see a detailed video about this tool, so let me know in the comments and I will make a detailed video about this tool. So make sure you are subscribed here, and I'll catch you in the next video. See you soon.